Hi there, guys. Welcome back to another roundup. This is going to be slightly different. Instead of just rounding up what happened in December, we're going to do a roundup of 2024. So bear with me. It might be a little bit longer than usual, but I think you'll find it interesting. We're going to go through what happened at the start of 2024. So the decreased volatility and decreased volumes in the Forex market. We're going to look at the Bank of Japan's intervention to defend the yen and the unwinding of the yen carry trade. Also going to look at the loosening more generally of monetary policy around the world, led by the European Central Bank and the Federal Reserve. And we'll have a look at gold. We're going to have a quick look at crypto. We'll have a chat about the conflict in the Middle East. And then finally, we're going to end up on Trump's election victory and what's happened in the markets the last couple of months. And then we're going to see what we can learn from this year and look into 2025, at least the start of it. So, welcome back. So we're going to start with the beginning of 2024. It was all very quiet. It was a very quiet start to the year, especially for the Forex markets. The crypto market was doing very well off the back of the SEC approving the Bitcoin ETFs at the end of 2023, and also the halving event in the spring. So crypto is doing quite well. But Forex was all very quiet. Traders knew that we were coming to the end of the monetary policy tightening cycle and that we're going to start seeing looser monetary policy from the main central banks. So everybody was sitting on the sidelines and not really getting involved. That doesn't mean traders weren't trading. It just meant that a lot of the major currency pairs were trading in a range and there wasn't too much volatility, so there wasn't too much volume. And instead, we saw a real boost to the US equities market. As I said, we saw traders moving into crypto as well, gold as well, which more on gold a little bit later. And commodities also a large boost as a result of less activity in the Forex market. That all came to an end in about March when we saw the Bank of Japan raise interest rates into positive territory for the first time in 17 years. And why was this important? So the Bank of Japan had been keeping negative interest rates for many years since the great crash of 2008. And this is an attempt to boost the Japanese economy. As interest rates around the world, in other countries, in the United States and in Europe and most other countries, had been raised over the last few years in an effort to combat inflation, we started seeing a really increased differential between interest rates in Japan and the United States. This made the Japanese yen a target for speculators, but also a target for something called the yen carry trade. The yen carry trade is a tool used by investors whereby they would borrow money in yen, which is a very low interest rate, so very low cost. And instead they would buy high yielding assets around the world, whether that's emerging market currencies such as the Mexican peso or the Brazilian real, or whether it's often in the case US equities as well. So we saw a huge amount of money moving out of Japan, yen, in yen, and being poured into other asset classes around the world. This put even more pressure on the yen, and eventually the Japanese government decided that they needed to defend it. Japan is a export-led economy. They export the vast majority of their goods. So a weak yen is very poor for the Japanese economy and the Japanese consumer in general. And the Bank of Japan is known for being interventionist. So they raised interest rates into positive territory. This didn't do too much, to be honest, at the time. But then the Bank of Japan started getting involved directly to defend the yen by buying yen, selling US dollars. And we can see that this had a moderate effect. We saw the yen continue to weaken against the US dollar in the spring, despite these interventions, until eventually in July, when the Bank of Japan poured a lot of money in, and we saw the yen begin to appreciate hugely against the US dollar. And I think over the course of July into August, the yen appreciated against the dollar by 14%. And this led to the unwinding of the yen carry trade, as all of a sudden these yen loans that a lot of investors held in other assets became very expensive, and so they needed to repay. So they needed to sell off the assets that they'd been investing in order to repay their yen-denominated loans, and they did. And the yen appreciated, and but the end result of this was a bit of a shock to the markets. You may remember this at the beginning of August. There was a mini collapse in the markets. A lot of US equities suffered, but then a lot of emerging market currencies as well suffered as a result of speculators getting rid of this yen carry trade. So there was a pretty crazy few months in there. And meanwhile, while this was happening, we also had the end of the tighter monetary policy that we saw in central banks around the world. This is led by the Swedish and the Hungarian central banks, I think, with the first to lower interest rates, followed by the ECB, the European Central Bank, and then followed by the Federal Reserve. The Federal Reserve was the last to go because the United States economy, as you might recall, had been really resilient throughout this period of high inflation, had been very strong. And so there was still a concern that inflation was still going to be an issue in the United States. And as a result, we saw a continued dollar strength throughout the middle half of the year, and we saw the dollar being much stronger than other currencies, and this is also off the back of the dollar being a haven as an asset class, and with the instability that we've seen in the Middle East, the continuing instability in the Russia-Ukraine situation, it's an easy bet to make to keep money in US dollars. But we did see this this loosening of monetary policy that started in Europe and has since spread and is continuing to spread, and we're continuing to see central banks lowering interest rates, though the US dollar has remained king throughout this time. But we're going to get to that in a second, more on the dollar. But before we do that, I just want to touch on another asset class that's had a bit of an odd year, is gold. Gold, you may notice, has had a bumpy year. It's hit record highs over and over again, seems a new record high every other week for a lot of the year. And this was for a number of reasons. Gold has been bought heavily by central banks in the preceding years. This is for geopolitical reasons. Governments around the world are worried about Trump's and the Biden administration weaponizing the US dollar. And they would like to move away from a dollar-denominated economy if they could possibly can in any way. And so we've seen a lot of central banks around the world buying up more gold prices. This has given a good support to gold prices. But then at the end of last year, we saw a relative dollar weakness give real support to gold, as well as the gold is denominated in dollars. So when there's a weaker dollar, then you get a higher, then gold is cheaper to purchase. And then on top of this, we have all the instability in the world right now. You may have noticed the world is going through a pretty precarious time. We've got a lot of conflicts in the Middle East. There's ongoing conflict between Russia and Ukraine, and gold always benefits as a haven asset. So these three factors together has led to an increase in retail demand. And we saw gold prices just keep on getting higher and higher and higher, to the point where even I think a lot of experienced traders, a lot of experienced market watchers were quite surprised that even as the dollar continued to strengthen through the summer months, gold prices continued to strengthen as well. And there's usually a negative correlation between the two, but that wasn't necessarily apparent. And this is when I think a few other market watchers began to suspect there might be a bubble forming here. But then brings us on neatly to when the gold price fell in November of this year. And that the final thing we're going to talk about is Trump's election for the second time as president of the United States. And this has had multiple effects on the market, and one of which was dollar strength, huge dollar strength that we've seen and is continuing to see, and I imagine will continue to see into 2025. Trump's economic policies, especially his tariffs that he plans to place on pretty much anybody he disagrees with. So whether that's China, whether it's European Union, or as he's said on social media in recent weeks, I think Canada and Mexico, and then also the nations of the BRICS countries, so Brazil, Russia, India, and China. By placing tariffs on anyone, he is going to increase inflation in the United States, which then means that the Federal Reserve will have to raise interest rates in order to keep inflation suppressed. And all of this is very dollar positive. So the dollar, as soon as Trump was confirmed elected, we saw the dollar get even stronger and has continued to be strong. And we've seen other currencies suffer as a result. The other result of Trump's presidency, as I'm sure you've noticed, is crypto. Crypto prices have gone through the roof, led by Bitcoin, but everything Everything has gone up with crypto. This is Trump has said specifically that he wants to deregulate the crypto industry in the United States. He wants to get rid of a lot of the checks and balances and get rid of a lot of what some felt was a persecution by the SEC under the Biden administration for the crypto industry. So this means that we'll probably see a lot more institutional capital move into the crypto sphere, and so a lot more money and more normalization of crypto as a standard asset class. I'm not going to pass judgment on whether I think this is good or bad. All I can say is I think we can see that we've seen that crypto has Bitcoin price has gone through the roof. It's well above 100,000, and that I think crypto is probably going to have a very good 2025 as a result of this. We've also seen the equity markets do very well off the back of Trump. Similarly to Bitcoin and crypto, Trump has said he wants to deregulate a lot of the SEC's involvement in the equities markets, in business in general. So especially in spheres of mergers and acquisitions, he's particularly interested in loosening up regulation there. So equities have done very well. He's also, talked about tax cuts as well for business, which is always good news. So we've seen equities, we've seen crypto, and we've seen the dollar do very well. And then looking ahead to 2025, I think Trump's made it very clear that once he assumes the presidency on the 20th of January, he's going to send off a flurry of executive orders. So expect the crypto market, as I said, to continue to do well in 2025. The dollar is going to continue to strengthen in 2025. I think we're going to see a strong dollar throughout most of the year. Other currencies, I think we're going to see extreme volatility in other currency markets. And equities, I think, at least in the short term, medium term, probably up until the summer, first half of the year, I think I'm going to do very well. A word of caution here. Trump's last presidency is categorized by policy via social media. So his late night tweets on Truth Social or on X have a real ability to shake markets. Forex in particular, it's a very sensitive asset class, very sensitive to rumors, very sensitive to forward-looking statements made by people in power. So when Trump says he's going to slap tariffs on a country or slap tariffs on this country, he's going to do something, we can expect the Forex markets to move as a result of that. So I fully expect 2025 to be a very volatile year for the currency markets. But other than that, strong dollar, strong crypto, and pretty good for equities, at least in the first half of the year. So there you go. That's your 2024 roundup and where I think we're going to look at least in the first part of 2025. Thanks so much for tuning in and wishing you all a very Merry Christmas, or if you don't celebrate, a very happy holidays. Hope you spend some good time with your loved ones and your family this year. And I hope you have a fantastic start to the year. And I'll see you in January for a roundup of January's markets. Thanks so much.